Picture this. You're standing in line at the supermarket on a Tuesday afternoon, cart full of groceries, nothing unusual about the day. The cashier scans your items, you tap your card against the reader, and then you see it. That word flashing on the screen that makes your stomach drop. Declined. You try again, thinking maybe it was a glitch, maybe the reader didn't catch the chip properly. Declined again. The people behind you are starting to shift their weight, and you can feel their eyes on the back of your head. You pull out a second card, the backup one you rarely use, and try that instead. Declined. This is exactly what happened to him on an ordinary afternoon in March. He wasn't behind on payments. He wasn't overdrawn. His account had thousands sitting in it. His salary had just cleared 3 days earlier. But standing there in that supermarket, watching the cashier's sympathetic smile fade into awkward discomfort, none of that mattered. He mumbled an apology, left the cart where it stood, and walked out into the parking lot with his phone already in his hand. Something was very, very wrong. He opened his banking app, expecting to see some kind of error message, maybe a notification about suspicious activity that he could quickly clear up with a tap. Instead, what he saw was worse than he could have imagined. His balance was still there, every penny he'd earned, saved, and relied on. But above it, in calm corporate font, was a message that would define the next 6 weeks of his life. Your account is currently under review for security purposes. All transactions have been temporarily restricted. For more information, please contact customer service. That was it. No explanation of what triggered the review, no timeline for when it might be resolved, no way to access his own money. He called the number immediately, right there in the parking lot, pacing between cars as the hold music looped for 12 minutes. When someone finally picked up, he explained the situation, the declined cards, the message in the app, the complete lack of information. The representative's voice was polite but scripted, clearly reading from a screen he couldn't see. She confirmed that yes, his account was under a security review. No, she couldn't tell him why. No, she didn't have access to that information. The fraud and compliance team would be reviewing his account, and he should expect an email within 2 to 3 business days. Was there anything else she could help him with today? He asked if he could speak to someone in the fraud department directly. She said they don't take inbound calls. He asked if there was any way to access even a portion of his funds for essential expenses. She said no, not during a security review. The account was completely frozen until the review was complete. That night, lying in bed, he started making a mental list of everything tied to that account. His rent payment was set to auto-pay in 4 days. His car insurance, his phone bill, his internet, his electricity, all scheduled to pull from that same frozen account. His daughter's daycare fees, the minimum payment on his credit card. Years ago, he'd consolidated everything into one account for simplicity, to keep his finances organized and easy to track. That decision, which had seemed so practical at the time, was now revealing itself as a catastrophic single point of failure. He thought about his parents, who still kept their money split across 3 different banks, and for the first time in his adult life, he understood why. The next morning, he woke up to 2 emails. The first was from his landlord's property management company. Rent payment returned. $35 insufficient funds fee applied to his account. Please remit payment within 5 days to avoid late penalties. The second was from his car insurance. Automatic payment failed. Coverage may be suspended if payment is not received within 10 days. He hadn't even had his coffee yet, and his carefully maintained financial life was already collapsing around him. He tried calling the bank again, hoping that maybe a different representative would have more information or more authority to help. 23 minutes on hold this time. Same script, same apologies, same non-answers. The review was ongoing. He should wait for an email, There was nothing they could do. He went to his computer and sent an email to the customer service address listed on the bank's website, laying out the situation in detail, attaching his ID, his recent pay stubs, and bank statements showing months of normal, predictable transactions. He explained that he was a longtime customer, that he had no idea what had triggered this review, and that he urgently needed access to his funds to pay for rent, utilities, and other essential expenses. He kept the tone respectful, professional, almost pleading. He hit send and watched the automated reply arrive 30 seconds later. "Thank you for contacting us. Your email has been received and will be reviewed by our team. Please allow 5 to 7 business days for a response. For immediate assistance, please call our customer service line, the same customer service line that couldn't actually help him." By the end of the week, the situation had gone from stressful to genuinely frightening. His rent payment had bounced. His electricity bill had been returned. His credit card payment was marked as missed, the first time in 8 years he'd ever been late on any payment. He tried explaining the situation to his landlord, to the utility company, to anyone who would listen, but it all sounded absurd even as he said it out loud. "My bank froze my account and won't tell me why." It sounded like an excuse, like something you'd make up to buy time when you couldn't pay your bills. But it was the truth, and the truth was destroying his credit, his reputation, and his peace of mind, one bounced payment at a time. What would you do in this situation? This is the kind of story we explore on System Nightmares, real people trapped inside systems that are supposed to serve them, but instead become bureaucratic prisons they can't escape. We don't cover these cases for shock value or entertainment. We cover them because they reveal how banks, insurers, and institutions actually operate when something goes wrong, and because understanding these failures might help you avoid them or at least know how to fight back. If stories like this help you understand how these systems really work, consider subscribing to System Nightmares so you don't miss future episodes. This is just the beginning of what happened when one man's account was frozen overnight, and nobody would explain why. His name is Michael, and until that Tuesday in March, his life was built on a foundation of careful, deliberate choices. He was 34 years old, working as a logistics coordinator for a mid-sized distribution company, the kind of job that doesn't make headlines, but keeps the economy running. His salary wasn't extraordinary, around $58,000 a year before taxes, but it was steady, predictable, and enough to support the life he'd built with his wife Sarah and their 4-year-old daughter Emma. They rented a 2-bedroom apartment in a decent neighborhood, drove a used sedan that was paid off, and lived within their means with the discipline of people who understood what it meant to be one emergency away from disaster. Michael had been banking with the same institution for 9 years, ever since he'd graduated from college and landed his first real job. Back then, he'd opened the account because it was convenient. There was a branch near his apartment, and the bank offered free checking with direct deposit. Over the years, that single account had become the central nervous system of his financial life. His paycheck was deposited there every other Friday. His rent, set to auto-pay on the first of each month, pulled from that account. His car insurance, his phone bill, his internet service, his credit card payment, all of it automated, all of it flowing through that one account. He'd set it up that way intentionally, reading articles about personal finance that praised the simplicity of consolidation, the ease of tracking everything in one place. He wasn't financially reckless, but he wasn't overly cautious either. He had about $6,000 in savings sitting in that same account, money he'd accumulated slowly over 2 years by putting away a little from each paycheck. It wasn't enough to retire on, but it was enough to cover a broken water heater, a medical bill, or a month of rent if something went wrong at work. Or at least, that's what he'd thought. He'd never imagined a scenario where he'd have money in the bank and still be unable to pay for groceries. The idea that his own bank could lock him out of his own funds without warning and without explanation had simply never occurred to him as a possibility. Why would it? He wasn't a criminal. He wasn't laundering money or funding anything illegal. He was just a guy trying to pay his bills and save a little for the future. Sarah worked part-time as a dental hygienist, 3 days a week, bringing in about $18,000 a year. Her income went into a separate account at a different bank, money they used primarily for household expenses, groceries, and Emma's daycare costs. It was a system that had worked well for them. Michael's account handled the big, fixed expenses. Sarah's account handled the variable day-to-day costs, and they'd never had to worry about overdrafts or missed payments. But now, with Michael's account frozen, that carefully balanced system was collapsing. Sarah's income alone wasn't enough to cover rent, utilities, insurance, and everything else that had been set to pull from Michael's account. They could stretch it for maybe a week, 2 at most, before the gap between what they earned and what they owed became insurmountable. Michael's job required focus, attention to detail, the ability to juggle multiple shipments and deadlines without letting anything slip through the cracks. But in the days following the freeze, he found himself staring at his computer screen, unable to concentrate, refreshing his banking app every 15 minutes as if the message might suddenly change. His co-workers noticed he was distracted, making mistakes he normally wouldn't make, double-booking a delivery route, forgetting to confirm a shipment with a client. His manager pulled him aside to ask if everything was okay, and Michael tried to explain, but the words sounded absurd even to his own ears. My bank froze my account, and I don't know why. It sounded like the kind of excuse someone makes when they're hiding something worse. At home, the tension was suffocating. Sarah tried to be supportive, but he could see the worry in her eyes every time they talked about money, every time another bill came due. They'd always prided themselves on being responsible, on paying everything on time, on never being the kind of people who had to dodge calls from creditors or make excuses to landlords. Now, through no fault of their own, they were becoming exactly that. Emma, too young to understand what was happening, kept asking why Daddy seemed sad, why Mommy and Daddy were whispering in the kitchen after she went to bed. They tried to shield her from it, but kids sense stress the way animals sense storms coming. The thing that made it all so much worse was the randomness of it. Michael had done nothing unusual. No large deposits, no international transfers, no sudden changes in his spending patterns. The week before the freeze, his transactions had been completely ordinary. Gas station, grocery store, online payment for Emma's daycare, a charge at the hardware store for a new shower head. There was nothing there that should have triggered any kind of alarm. He'd gone over every transaction 100 times, searching for something that might explain it, some mistake he'd made that had flagged the system. He found nothing, just the regular rhythm of a regular life, suddenly and inexplicably interrupted. This is what made Michael's story so terrifying to anyone who heard it later. He wasn't an outlier. He wasn't someone operating on the margins of the financial system, pushing boundaries or taking risks. He was the definition of a safe, predictable customer, the kind banks claim to value most. And yet, when an automated system flagged his account for reasons he would never fully understand, he became powerless. The institution he'd trusted with 9 years of loyalty, 9 years of on-time payments and responsible banking, treated him not as a valued customer, but as a potential threat. And in doing so, it threatened everything he'd worked to build. The first 48 hours after the freeze were defined by a single, maddening reality. Nobody Michael spoke to could tell him anything useful. Every phone call followed the same script. Every email generated the same automated response, and every attempt to get concrete information hit the same wall of corporate bureaucracy. It wasn't that people were rude. Most of the customer service representatives he spoke to were polite, even sympathetic, but they were powerless. They could see that his account was frozen. They could confirm that it was under review. But they couldn't tell him why. They couldn't tell him when it would be resolved, and they couldn't connect him to anyone who actually had the authority to make decisions about his case. His first call, the one he made from the supermarket parking lot, had lasted 18 minutes. The representative, a woman with a professional but slightly weary voice, had walked him through the standard troubleshooting steps as if his cards had been declined due to a technical glitch. Have you tried using a different ATM? Have you checked to make sure your card isn't expired? Have you confirmed that you have sufficient funds in your account? Michael had answered each question with increasing frustration, explaining that yes, he had money, yes, his card was valid, and yes, the app itself was showing a security review message. Only then did her tone shift slightly, moving from troubleshooting mode into something more guarded. She put him on hold for 3 minutes, came back, and confirmed what he already knew. His account had been flagged for a security review, and all transactions were restricted until the review was complete. When Michael asked why his account had been flagged, she said she didn't have access to that information. When he asked how long the review would take, she said she couldn't provide a specific timeline. When he asked if he could speak to someone in the fraud or compliance department who could give him more details, she said those teams didn't take inbound calls. The only thing she could offer was a promise that he would receive an email within 2 to 3 business days with more information. Michael asked what he was supposed to do in the meantime. How was he supposed to pay his rent, his bills, his essential expenses? She paused, and he could hear the discomfort in her voice when she replied, "Unfortunately, while an account is under security review, we're unable to authorize any transactions or provide access to funds. I understand this is difficult, but the review team will work to resolve this as quickly as possible." That phrase, "as quickly as possible," became a constant refrain over the next several days. Michael called back the next morning, hoping that maybe a different representative would have more information or more authority. He waited on hold for 23 minutes this time, listening to the same loop of pleasant music interrupted periodically by a recorded voice assuring him that his call was very important. When someone finally picked up, it was a man this time, younger sounding, reading from what was clearly the same script. Yes, the account was under review. No, he couldn't access details about why. No, there was no way to expedite the process. The review team was working on it, and Michael should expect an email with updates within 2 to 3 business days. When Michael pointed out that he'd been told the exact same thing yesterday, the representative apologized, but offered nothing new. The system didn't allow him to see anything beyond the basic flag on the account. Michael tried a different approach. He asked if there was a ticket number or case number he could reference, something that would at least confirm his situation was being actively worked on. The representative said there was an internal reference number, but that it wouldn't be useful to Michael because he couldn't use it to check status or contact anyone directly. Michael asked if he could escalate the call to a supervisor. The representative said he could, but the supervisor would have access to the same information, which is to say almost none. Michael insisted anyway, and after another 15 minutes on hold, a supervisor came on the line. Her tone was more authoritative, but her answers were identical. The account was under review. The fraud and compliance team was handling it. They would reach out via email. There was nothing else she could tell him. The email Michael had sent the first day, the one with his identification documents, his pay stubs, and his detailed explanation, had generated an automated reply within seconds. "Thank you for contacting us. Your message has been received and will be reviewed by our team. Please allow 5 to 7 business days for a response. For immediate assistance, please call our customer service line. but the customer service line couldn't provide immediate assistance. It could only tell him to wait for an email, and the email system was telling him to call the customer service line. It was a perfect loop of non-help, a system designed to deflect rather than resolve. On day 3, Michael tried a different tactic. He went onto the bank's website and used the secure messaging feature within his online banking portal, thinking that maybe an internal message would get routed differently than an external email. He wrote another detailed explanation, keeping his tone professional and requesting specific information: what triggered the review, what documentation they needed from him, and what the expected timeline was for resolution. The response came back 6 hours later, and it was clear that whoever wrote it had not read his message carefully, if at all. Thank you for contacting us regarding your account. We understand you have concerns about a recent transaction. Please be assured that we take security very seriously. If you believe there has been unauthorized activity on your account, please call our fraud hotline immediately. The message included a phone number, the same number he'd already called 4 times. Have you ever been stuck in a loop like this, where every person you talk to sends you to someone else and nobody actually helps? It's a special kind of frustration, the feeling that you're shouting into a void that occasionally shouts generic pleasantries back at you, but never actually listens. Michael was living inside that void, spending hours each day on hold, sending messages that generated automated replies and getting nowhere. His account remained frozen, his bills remained unpaid, and the promised email with actual information never arrived. The confusion wasn't just about what had triggered the freeze. It was about the realization that the system he'd trusted with his financial life had no mechanism for communication, no process for urgent cases, and no human being willing or able to take responsibility for fixing what was clearly a mistake. By the end of the first week, Michael had accepted that phone calls and emails weren't going to solve anything. The representatives on the other end of the line were reading from scripts, the automated systems were sending him in circles, and nobody seemed willing or able to take ownership of his case. So he decided to try something that felt almost radical in the age of digital banking. He would go to a physical branch and speak to someone face to face. Surely, he thought, if he could sit down across a desk from an actual employee and explain his situation calmly and clearly, someone would be able to help him. It was a reasonable assumption, the kind of logic that made sense in a world where banks valued their customers. That assumption was about to be thoroughly demolished. The branch he visited was the same one where he'd opened his account 9 years earlier, a small location in a strip mall about 15 minutes from his apartment. He arrived during his lunch break on a Thursday carrying a folder with printed copies of his identification, his recent pay stubs, his bank statements from the past 6 months, and a typed letter explaining his situation. He'd prepared like he was going to a job interview, wanting to present himself as organized, reasonable, and cooperative. The lobby was nearly empty, just one other customer at the teller window and a middle-aged man sitting at a desk near the back, labeled Personal Banking. Michael approached the desk, introduced himself politely, and explained that his account had been frozen for a security review and that he needed help resolving the issue. The man listened, nodded sympathetically, and then asked Michael to have a seat while he pulled up the account. For 3 minutes, Michael watched the banker type, click, scroll, and frown at his screen. Finally, the man looked up with an expression that Michael was starting to recognize, the look of someone who wanted to help but knew they couldn't. "I can see that your account is flagged for a compliance review," the banker said carefully. "Unfortunately, I don't have access to the details of that review or the ability to make any changes to the account status. That's handled by a separate department, our fraud and compliance team, and they don't work out of the branches." Michael felt his frustration building but kept his voice calm. He explained that he'd already called the fraud and compliance team multiple times, that they kept telling him to wait for an email that never came, and that he'd been locked out of his money for over a week with no explanation. The banker nodded again, more slowly this time, and said he understood how frustrating that must be. But the tools we have here at the branch level are very limited when it comes to these kinds of reviews. I literally can't see what triggered the flag or what the status of the investigation is. It's all handled centrally. Michael asked if the banker could at least call someone in the fraud department on his behalf, maybe escalate the case, or confirm that it was being actively worked on. The banker hesitated, then picked up his phone and dialed an internal number. Michael could hear only one side of the conversation, but it was clear from the banker's tone that he was getting the same runaround Michael had been getting all week. Yes, account is under review. Customer is here in person, very concerned about timeline. Is there any way to expedite or get more information? A long pause. Okay. I understand. I'll let him know. The banker hung up and turned back to Michael with an apologetic expression. They're saying the review is ongoing, and that you'll be contacted via email once it's complete. They can't provide a specific timeline, and there's no way to expedite the process. I'm really sorry. I know that's not the answer you were hoping for. Michael pressed further. He asked who was actually reviewing his account, what department they were in, whether there was a supervisor or manager he could speak to. The banker's answers became vaguer with each question. It's handled by the compliance team, but they work with the fraud prevention department, and sometimes there's involvement from risk management, depending on what triggered the flag. I don't have direct contact information for any of those teams. Everything goes through the main customer service line you've already been calling. Michael felt like he was trying to navigate a maze with no exit. He asked the most basic question he could think of. Can you at least confirm that someone is actually looking at my case? That it hasn't just been forgotten in some queue somewhere? The banker looked genuinely uncomfortable. I can't confirm that specifically, no. The system just shows that it's flagged for review. I'm sorry I can't be more helpful. Michael left the branch feeling worse than when he'd arrived. The in-person visit, which had seemed like a logical next step, had revealed something deeply unsettling. Even the bank's own employees had no real access to information about their customers' accounts when those accounts were flagged by the bank's internal systems. The man he'd spoken to hadn't been dismissive or unhelpful. He'd genuinely tried to assist. But he'd been as powerless as Michael was. The bank, it turned out, was not a single entity with a unified system of communication and accountability. It was a collection of disconnected departments that didn't talk to each other, didn't share information, and didn't coordinate their responses. The fraud team blamed compliance. Compliance blamed risk management. Risk management blamed automated systems. And nobody, anywhere, took responsibility for the fact that a legitimate customer was being financially suffocated by the very institution that was supposed to safeguard his money. Over the next few days, Michael tried 2 more branches, hoping that maybe a different location would have someone with more authority or better access to information. At the second branch, a young woman told him the account was under review and suggested he call customer service. At the third branch, an older manager pulled up his account, made a phone call to an internal department, and then told him that the case was with fraud prevention and that compliance was also involved. But she couldn't tell him which department was actually handling the review or when it would be resolved. The stories weren't contradictory so much as they were incomplete and overlapping, like pieces of a puzzle that didn't quite fit together. Everyone acknowledged that something was happening, but nobody could explain what, why, or when it would end. Michael started to understand that this wasn't incompetence or laziness on the part of individual employees. It was the system itself, a deliberately opaque structure designed to protect the bank from risk, even if that meant leaving customers trapped in bureaucratic limbo with no recourse and no clear path to resolution. 2 weeks into the freeze, Michael's life had shifted from inconvenient to genuinely catastrophic. The abstract fear of financial ruin had become concrete, measurable, and suffocating. His rent payment had bounced twice now, and his landlord's property management company had sent him a formal notice: pay the outstanding balance plus late fees within 5 days or face eviction proceedings. His car insurance had been canceled for non-payment, which meant he was now driving illegally to work every day, risking a ticket he couldn't afford and liability he couldn't cover. His credit card company had reported his missed payment to the credit bureaus, dropping his credit score by 68 points overnight. The domino effect he'd feared in those first panicked hours was now fully underway, and he was powerless to stop it. The worst part wasn't even the financial damage. It was the humiliation of trying to explain what was happening to people who had the power to make his life even harder. He'd called his landlord directly, bypassing the property management company, and tried to explain that his bank had frozen his account without warning and that he had the money but couldn't access it. The landlord had been polite but skeptical, clearly hearing this as an excuse rather than an explanation. "I understand you're going through something," the landlord had said carefully, "but I have a mortgage to pay on that property, and I can't accept explanations instead of rent. If the payment doesn't clear by Friday, I have to proceed with the eviction process. It's nothing personal." Michael had felt his face burning with shame, even though he was alone in his apartment during the call. He wasn't the kind of person who missed rent payments. He'd never been late on anything in his adult life. But now, through no fault of his own, he was being cast as unreliable, irresponsible, someone who made excuses instead of meeting his obligations. At work, his performance had deteriorated to the point where his manager had pulled him aside for a serious conversation. "Michael, I know something's going on with you, and I want to help if I can, but I need you to be present when you're here. You've made 3 significant errors this week, and clients are starting to notice." Michael had apologized, promised to do better, but he knew his promises were hollow. How could he focus on logistics coordination when his phone was buzzing every hour with notifications about bounced payments, penalty fees, and collection warnings? How could he care about shipment schedules when his daughter's daycare had sent an email saying that her enrollment would be suspended if payment wasn't received by the end of the week? The job that was supposed to be his anchor, the steady income that made everything else possible, was slipping away from him because he couldn't stop thinking about the financial disaster unfolding in real time. Sarah had tried to be supportive, but the stress was fracturing their relationship in ways that frightened him. They'd had the same argument 3 times in 1 week, variations on a theme of why didn't you have a backup plan and how could you put everything in one account, and what are we supposed to do now? He tried to explain that this wasn't supposed to be possible, that banks don't just freeze accounts without reason, that he'd done everything right and the system had failed him anyway. But his explanations sounded defensive even to his own ears, and Sarah's frustration was understandable. She was working extra shifts at the dental office, trying to stretch her income to cover expenses it was never meant to cover, coming home exhausted and finding him hunched over his laptop at midnight, refreshing his banking app for the 100th time as if the screen might suddenly show something different. The worst moment had come when Emma, perceptive in the way that 4-year-olds can be, had asked why Mommy and Daddy were always sad now. Neither of them had known how to answer. It was during one of those late-night sessions, too anxious to sleep and too tired to think clearly, that Michael discovered he wasn't alone. He'd typed frozen bank account into a search engine, not really expecting to find anything useful, and instead found himself falling down a rabbit hole of forums, Reddit threads, and consumer complaint websites filled with stories almost identical to his own. There were dozens of them, people whose accounts had been frozen for security reviews that lasted weeks or months, who'd been given no explanation and no timeline, who'd lost jobs and homes and marriages because a bank's automated system had flagged them as suspicious. The details varied, but the structure was always the same. Sudden freeze, generic explanations, unreachable departments, mounting consequences, and a pervasive sense that the system was designed to protect the bank rather than serve the customer. Reading those stories gave Michael a strange mixture of validation and despair. Validation because it confirmed that this wasn't his fault, that he hadn't done something uniquely stupid to deserve this nightmare. Despair because the outcomes were rarely happy. Some people got their accounts unfrozen after weeks or months, often with no apology or explanation. Others had their accounts closed entirely, their money eventually returned via check after prolonged battles with customer service. A few had escalated to regulators or lawyers and won small victories, but the process had taken months and cost them more in stress and lost time than they'd recovered. The consensus in these forums was grim. Once you're caught in this kind of freeze, there's no quick way out. You wait, you document everything, and you hope the bank eventually decides you're not worth the trouble of keeping frozen. Michael started documenting everything with the obsessive detail of someone building a legal case. He created a spreadsheet logging every phone call he'd made to the bank, including date, time, duration, representative name if provided, and a summary of what was said. He saved every email, every automated response, every generic promise that someone would get back to him. He took screenshots of his banking app showing the freeze message alongside his account balance, proving that his money was there, but inaccessible. He printed bank statements going back 12 months, highlighting the pattern of normal, predictable transactions that should have raised no red flags. He gathered pay stubs, utility bills, rental agreements, tax returns, anything that might prove he was exactly who he claimed to be, a regular person living a regular life who'd been swept up in some algorithmic nightmare. Armed with this documentation, Michael filed complaints with every authority he could find. He submitted a formal complaint to the Consumer Financial Protection Bureau, detailing the timeline of the freeze and the bank's failure to provide information or access to funds. He filed a complaint with his state's banking regulator. He contacted the bank's internal ombudsman office, a department he'd discovered existed only through his late-night research. Each complaint required filling out forms, attaching documentation, and waiting for responses that might or might not come. The process felt like shouting into a series of voids, each one promising to echo back, but none of them actually doing so. But he did it anyway because doing nothing felt like surrender, and he wasn't ready to surrender yet. On day 39 of the freeze, Michael received the eviction notice. It arrived in a certified envelope, the kind that requires a signature, the kind that makes your hands shake as you open it because you know nothing good ever comes in certified mail. The document was formal, legalistic, detached, a notice to vacate the premises within 30 days due to non-payment of rent and accumulated late fees totaling $2,412. There was a paragraph about his rights as a tenant, another about the legal process that would follow if he didn't comply, and a phone number to call if he wanted to discuss a payment plan. Michael read it 3 times, sitting on the edge of his bed in the middle of the afternoon, and felt something inside him crack. Not break entirely, but crack in a way that suggested the whole structure might collapse if any more pressure was applied. His credit score had dropped from 718 to 623. He'd checked it obsessively over the past few weeks, watching the number fall with each missed payment, each bounced transaction, each penalty fee. The score was more than just a number. It represented years of careful financial management, years of paying everything on time, years of building trust with creditors and lenders. All of it was being destroyed by something completely outside his control. He'd tried explaining this to the credit card company when they called about his missed payment, and the representative had listened politely before informing him that the late payment would remain on his credit report for 7 years, unless the debt was satisfied. 7 years. Michael had been 27 when he opened that credit card. By the time this mark disappeared, he'd be over 40, assuming the freeze ever ended and he could get his financial life back on track. The relationship with Sarah had moved past tension into something colder and more dangerous. They barely spoke now, except to coordinate the logistics of survival, whose account would pay, for what, how much longer they could stretch their resources, whether they should ask family for help. That last question had sparked their worst fight yet, with Michael insisting he wouldn't humiliate himself by asking his parents for money, and Sarah yelling that his pride was less important than keeping a roof over their daughter's head. She'd been right, of course, and he'd known it even as he argued, but admitting defeat to his parents felt like confirming every doubt they'd ever had about his ability to manage adult responsibilities. His father had warned him years ago about keeping all his money in one place, and Michael had dismissed it as old-fashioned thinking. The thought of calling his father now and admitting he'd been wrong felt almost as unbearable as the eviction notice itself. Work had become a place where Michael showed up physically, but existed nowhere else. His manager had stopped pulling him aside for conversations about performance and started documenting his errors in writing, the kind of paper trail companies build before they fire someone. Michael knew this, recognized the pattern, but couldn't summon the energy to care. What was the point of keeping a job if he had nowhere to live? What was the point of earning money that would just go into an account he couldn't access? The absurdity of it all had pushed him past fear and frustration into a kind of numb resignation. He went through the motions, showed up, sat at his desk, responded to emails, attended meetings, but he felt like he was watching himself from outside his body, observing a man slowly drowning in bureaucratic quicksand. Then, on a Wednesday morning in his 6th week of the freeze, Michael's phone buzzed with a notification from his banking app. His first thought was that it was another automated message about a bounced payment or a new fee. He'd developed a Pavlovian response to those notifications, a spike of anxiety followed by a wave of exhaustion. But when he opened the app, what he saw made him stop breathing for a moment. The security review message was gone. His balance was displayed normally, with no restrictions noted. He tapped on his account details, expecting to see some kind of error. But everything looked normal, functional, accessible. The freeze had been lifted. He called the bank immediately, half convinced this was a mistake, that the account would freeze again as soon as he tried to use it. The representative confirmed that yes, the security review had been completed, and all restrictions on the account had been removed. Michael asked what had triggered the review in the first place. The representative said she didn't have access to that information. Michael asked what had changed to cause them to lift the freeze. She said the review had been completed and the account cleared. That was all the information she could provide. Michael asked if there would be any compensation for the 6 weeks of financial devastation he'd endured. The representative paused, then said that unfortunately, banks aren't required to provide compensation for security holds, but that he could file a formal complaint if he felt the freeze had been handled improperly. That afternoon, Michael transferred money to pay his rent, his overdue bills, his credit card. He paid the late fees, the penalty charges, the accumulated interest. The money was there. It had been there the entire time, but accessing it now felt hollow, like being released from prison only to find that everyone you knew had moved on without you. The eviction notice was still valid. His landlord had already initiated proceedings and wouldn't drop them without legal incentive. His credit score was still damaged, those late payments permanently recorded. His relationship with Sarah was still fractured, his job was still in jeopardy. The freeze had ended, but the consequences were just beginning. He checked his email later that evening and found a message from the bank, sent at 4:37 that afternoon. The subject line read, "Account review completed." The body of the email was 3 sentences long. "Thank you for your patience during our recent security review of your account. The review has been completed and no further action is required on your part. If you have any questions, please contact our customer service department. No apology, no explanation, no acknowledgement of what those 6 weeks had cost him. Just a polite, corporate notification that the nightmare was over, as if it had been a minor inconvenience rather than a financial catastrophe that had nearly destroyed his life." So how does something like this happen? How does a regular customer with a 9-year banking history and a completely normal transaction pattern end up frozen out of his own account for 6 weeks with no explanation and no recourse? The answer lies in understanding how modern banks actually operate behind the polished interfaces and friendly marketing as vast, automated bureaucracies where risk management trumps customer service, where algorithms make decisions that humans can't override, and where legal frameworks protect the institution far more than they protect the people whose money the institution holds. This isn't a story about one bad bank or one incompetent employee. It's a story about systemic design choices that prioritize institutional protection over individual fairness, and it's playing out at banks across the developed world every single day. Most account freezes start with automated fraud detection systems, sophisticated algorithms that monitor every transaction flowing through the bank's network, looking for patterns that might indicate illegal activity. These systems scan for things like unusually large deposits, rapid transfers between accounts, international wire transfers to high-risk countries, sudden changes in spending patterns, or transactions that match known fraud typologies. The algorithms are constantly learning, constantly updating, fed by data from millions of accounts and trained to flag anything that deviates from established norms. When the system identifies something suspicious, it doesn't send an alert to a human analyst who then investigates and makes a judgment call. Instead, it automatically triggers a freeze, locking the account immediately and routing the case to a compliance queue for eventual review. The freeze happens first, investigation happens later, and the customer finds out only when their card stops working. This freeze-first approach is baked into regulatory frameworks that were designed with good intentions to combat money laundering, terrorist financing, and organized crime. Laws, like the Bank Secrecy Act in the United States and similar regulations in other countries, require banks to monitor for suspicious activity and report it to government authorities. Banks that fail to catch illegal transactions face massive fines. We're talking hundreds of millions or even billions of dollars, plus regulatory sanctions, reputational damage, and potential criminal liability for executives. From the bank's perspective, the calculus is simple. Freezing 100 innocent accounts is preferable to missing one genuinely suspicious transaction. The cost of a false positive, a wrongly frozen account, is minimal from the bank's perspective. Maybe the customer files a complaint. Maybe they leave the bank eventually, but there's no significant financial penalty. The cost of a false negative, missing actual money laundering, can destroy the institution. This creates a powerful incentive to overreact, to set the algorithms to maximum sensitivity, to freeze accounts at the slightest hint of irregularity. Banks call this being conservative or risk-averse, but what it really means is that the burden of the bank's legal compliance is shifted entirely onto customers who have no idea they're carrying it. When Michael's account was flagged, and we still don't know exactly what triggered it, though it was likely some combination of transaction patterns that the algorithm deemed unusual, the system didn't evaluate whether he seemed like a money launderer or a criminal. It just saw a deviation from the norm and executed its programmed response: freeze and review. The fact that Michael was a loyal customer, that his transactions were easily explainable, that he had no history of suspicious activity, all of this was irrelevant to the initial decision because the initial decision wasn't made by a person who could weigh those factors. Once an account is frozen, it enters what banks call the compliance review process, and this is where the real nightmare begins. The review isn't conducted by the customer service representatives you can reach on the phone. They have no access to the compliance system and no authority to influence its decisions. It's not handled by branch employees either, as Michael discovered when he visited in person. The review is conducted by a centralized compliance team, often located in a different city or even a different country, working through a queue of flagged accounts in the order they were received. These analysts have performance metrics to meet, a certain number of cases reviewed per day, and they're working with limited information, usually just transaction data and whatever automated risk scoring the system has generated. They don't know the customer personally, they don't see the human impact of the freeze, and they have no incentive to prioritize urgent cases over routine ones. The legal framework governing these freezes heavily favors the bank. In most jurisdictions, banks have extremely broad authority to freeze accounts for security reviews without providing specific reasons, without adhering to strict timelines, and without compensating customers for damages caused by wrongful freezes. The terms and conditions that every customer agrees to when opening an account, those documents nobody actually reads, include clauses that essentially say the bank can freeze your account at any time for any reason related to security, fraud prevention, or regulatory compliance, and that the bank is not liable for any consequences you suffer as a result. Courts have generally upheld these terms, reasoning that banks need flexibility to combat financial crime, and that requiring banks to explain or justify every freeze would undermine the effectiveness of their security measures. The customer's right to access their own money is subordinate to the bank's obligation to prevent misuse of the financial system. The call centers and customer service systems are designed not to solve complex problems, but to handle high volumes of routine inquiries efficiently. Representatives work from scripts. They have access to limited information, and they're measured on metrics like average call time and customer satisfaction scores, not on whether they actually resolve underlying issues. When someone like Michael calls with a frozen account, the representative can see that the account is frozen, but they can't see why. They can't contact the compliance team directly, and they can't escalate the case except by entering a note into a system that may or may not be read by anyone with authority. The structure is deliberately siloed. Customer-facing staff are kept separate from risk and compliance staff, both to protect the integrity of fraud investigations and to insulate the bank from having to make binding promises or commitments through frontline employees. What this means in practice is that customers are trapped in an information black hole, unable to reach the people who are actually making decisions about their money. Michael's story isn't unique, and that's precisely what makes it so terrifying. Somewhere right now, someone else is standing at a checkout counter watching their card get declined. Someone else is calling a bank and getting the same scripted non-answers. Someone else is watching their financial life collapse because an algorithm flagged their account and no human being will intervene. You can't prevent every possible freeze. Banks have too much power and too little accountability for that. But you can structure your financial life in ways that make you less vulnerable and give you better options when systems fail. Here are 5 lessons drawn directly from cases like Michael's, practical steps that won't eliminate risk, but will significantly reduce your exposure to catastrophic outcomes. Lesson 1. Never rely on a single bank for all your financial needs. This is the most important takeaway from Michael's experience, the mistake that turned an inconvenience into a catastrophe. Diversify your banking the same way you diversify investments. Spread your money across at least 2, ideally 3, different institutions. Keep your primary checking account at one bank, a savings account at another, and a backup checking account at a third. Yes, this creates more complexity, more accounts to monitor, more passwords to remember. But that complexity is insurance against the scenario where one bank freezes you out and you're left with zero access to your money. When one account freezes, you have alternatives for paying rent, buying groceries, and keeping your financial life functional while you fight to resolve the primary freeze. Choose banks that are truly separate, different institutions, not just different accounts at the same bank, because internal freezes often affect all accounts a customer holds with that institution. Lesson 2. Document everything obsessively from the moment something seems wrong. Michael did this eventually, but he lost valuable time in those first few days when he was still trying to solve the problem through normal channels. Start a detailed log the instant you notice any irregularity. Frozen account, declined transaction, unusual hold, anything that seems off. Record every phone call with date, time, duration, representative name if provided, and a detailed summary of what was said. Save every email, every automated response, every message in your banking app. Take screenshots showing your account status, your available balance, any error messages or notices. If you visit a branch, write down the name of every person you speak to and what they told you. This documentation serves multiple purposes. It helps you track the progression of the problem. It provides evidence if you need to escalate to regulators or lawyers, and it protects you from banks claiming you were informed of things you never heard. Documentation transforms your experience from anecdotal frustration into verifiable fact. Lesson 3. Know how to escalate beyond frontline customer service, because the people who answer phones can't help you. When you call a bank about a frozen account, the representative you reach has almost no power and limited information. They can't unfreeze your account. They can't connect you to compliance, and they can't expedite your case. Don't waste hours repeating the same conversation with different representatives. Instead, immediately request to speak to a supervisor, then to a manager, then to the executive customer service team, if one exists. Search for the bank's executive or corporate contact information. Many banks have dedicated teams for escalated complaints that have more authority than standard customer service. File formal written complaints through every available channel. The bank's internal complaint system, their ombudsman if they have one, and external regulators. In the United States, file with the Consumer Financial Protection Bureau. In the UK, contact the Financial Ombudsman Service. In Canada, use the Financial Consumer Agency. In Australia, contact the Australian Financial Complaints Authority. These agencies can instantly unfreeze your account, but their involvement often prompts banks to prioritize your case and provide actual responses instead of automated deflection. Lesson 4. Understand what regulators can and cannot do, so you have realistic expectations. Regulatory complaints are important, but they're not magic solutions. When you file with a consumer protection agency, your complaint gets logged and the bank is required to respond, usually within 30 to 60 days. That response goes to the regulator, who evaluates whether the bank followed proper procedures and treated you fairly under existing rules. If the bank violated regulations, the regulator can impose fines, demand policy changes, or order the bank to compensate you. But here's the limitation. If the bank followed their internal procedures and acted within the broad authority granted by banking regulations, the regulator may conclude that no violation occurred even if you suffered significant harm. Regulators track patterns and trends. If enough people complain about similar issues, it can trigger investigations and policy reforms. But individual complaints don't always produce individual remedies. File the complaint anyway, because it creates an official record, it puts pressure on the bank, and it contributes to data that might protect future customers. Just don't expect it to instantly solve your immediate problem. Lesson 5. Build financial resilience so that one frozen account doesn't mean total collapse. Beyond diversifying banks, maintain an emergency fund in a separate, easily accessible account that you don't use for routine expenses. Keep some cash at home, not thousands of dollars, but enough to buy groceries and gas for a week or two if all your cards suddenly stop working. Consider keeping a credit card that's not linked to your primary bank, ideally one that's paid off or has available credit as a backup payment method. Review all your automatic payments and consider whether critical ones could be shifted to alternative accounts or payment methods. The goal isn't to create a perfectly fortress-proof financial life, that's impossible, but to ensure that when one part of the system fails, you have buffers and alternatives that buy you time to resolve the problem without losing your housing, your transportation, or your ability to feed your family. If you've been through something like this with a bank or any other institution, share your story in the comments if you feel comfortable. Your experience might help someone else recognize warning signs, know what steps to take, or simply feel less alone when they're trapped in a similar nightmare. These systems fail people every day, and the only way we build accountability is by making those failures visible. For more real stories of people trapped inside broken systems, subscribe and stay tuned for the next system nightmare. And remember, the best defense against institutional failure is preparation, documentation, and the knowledge that when systems are designed to protect themselves rather than serve you, you need to protect yourself first.